industrials are in focus. The case for a chat here being positive trends in Q2, strong Q2 led by execution pickup, and it's important to assess whether on the ground as well things are changing. So we have two gentlemen joining us to discuss the same. Murthy, Executive Vice President Finance, NCC, and Shobhit Uppal, who's Deputy MD, Ahluwalia Contracts. Good morning to both of you. Thanks very much for taking out the time. Mr. Murthy, let me start off by asking, one question to both of you, and I'll give you the lead. What is the trend seen across the industrial pack? Do you think execution is picking up? Are things improving? Are they better than what we've seen 2 or 3 years previously into this cycle?
Hello, are you getting me?
Mr. Murthy, we can hear you. Can you hear me?
Yeah, I'm hearing you. Yeah. Shall I answer?
Yes, please.
Yeah, we have seen some good improvement at the ground level. Execution is definitely picking up, and also a lot of orders that are to be completed in shorter duration, 18 months, 15 months, 24 months. They are all contributing substantially to the top line of the company, not only our company, even other companies. There is an infrastructure deficit in the country, and the policymakers are aware of that, and also to support the economy, to take it into a higher orbit of growth, they are taking a lot of initiatives to support physical infrastructure, which means a lot of opportunities for construction companies like us. So I see good improvement as compared to what it was 2-3 years back.
Right. You made an important point that, execution is picking up. Now, there is need for infrastructure. There is an infrastructure deficit, I understand that. But there's also a funding gap. And, Shobhit, do you feel that, with the efforts made by the government, that credit demand is picking up and access to credit is also improving?
Look, first of all, let me also add to what Mr. Murthy said about, what this government has done through its various project management arms, like the NBCC and CPWD. The EPC model of contracts is gaining traction. With that, what is happening is that, we as construction entities are in more control of our destiny in terms of timelines of the projects. Now the timelines are 2 years, 2.5 to 3 years, the stipulated timelines. And because we are doing the designing and we are doing the execution, so there is chances of delays are lesser. So, that is adding to our bottom line. So that's a very welcome step that the various project management arms of the government have taken. As far as the credit visibility is concerned, it's been on the upswing, but there is a bit of a liquidity crunch, especially in the private sector, seeing what has happened with the NBFCs. But largely, most of the construction companies are focusing on the public sector orders, because that is where the capex is coming from, and that is what has led to growth as far as we are concerned too.
Okay. Mr. Murthy, is a substantial increase in revenue accretion largely led by accretion in order book from FY17 levels for the sector, or do you think that there is new revenue flow also happening?
There is good improvement in the order book for most of the construction companies, and also execution is also picking up. Definitely it is likely to continue for some time. But what is required is the kind of support we need from the banking system, particularly in terms of bank guarantees and LCs. These are basically non-fund based limits, and the banks are having their own problems. So their support is not coming in good measure for construction companies like us. So that is the only constraint we are looking at. The fund based limits we can manage, because the clients are giving us a mobilization advance, and also payments are coming on time for our running bills. But based on the tender conditions, I have to provide bank guarantees to the clients, particularly the performance bank guarantees, mobilization advance guarantees. There we are seeing some constraint, because banks are not in a position to support fully our requirements.
Mr. Uppal, do you think this pickup in the last quarter should be a one-off because of the base effect, or do you expect order inflow momentum, which started earlier, will lead to strong resolution going forward too?
Yeah, we have seen good improvement in the order booking. Last year we got nearly 25,000 crores of fresh orders. Many of them are fast-track orders to be complete in 18 months, 24 months, like that. That's why the second quarter results were extremely satisfying. We have done a top line of nearly 3,000 crores as compared to 1,300 crores in the second quarter of the last year, despite monsoon and rains and all that. I believe the order pickup is also happening in the current year as well. And but again, the fourth quarter being an election year, how things will be, we have to see. But order accretion in the current year also is going to be quite robust as far as we are concerned.
Right. Shobhit, do you believe that order inflow will be steady this quarter too?
Yes, it will be, but again, I agree with Mr. Murthy. The fourth quarter, I think, will be a little sluggish because, you know, the elections will be around the corner and the bureaucracy and the government machinery will be busy with that. But by and large, it will be steady other than this blip in the last quarter of the financial year.
Right. Do you think, Shobhit, that this quarter should be a one-off due to the base effect, or you expect order inflow momentum to continue? You know, and moreover, what kind of incremental orders are you seeing? What's the size of?
Sorry.
Yeah. What's the size of incremental orders that you see coming through?
So we are seeing a lot of visibility as far as we are concerned. You know, the pipeline is about 4,000 crores. There is a lot of investment continuing in the healthcare sector, in the education sector. As we talk, we are bidding for a couple of large AIMS projects which are coming up through again NBCC and CPWD. So, and the scale of these orders ranges from about 400 crores to about 1,000 crores.
Right. Mr. Murthy, how much of that increasing pie do you see NCC bidding for and winning? I mean, what's the aim in terms of the orders that you're looking to bid for?
See, we are seeing good order acquisition in the current year also. We have given a guidance of about 14,000 crores for FY19. In the first 7 months of the current year, we already bagged about 9,000 crores of orders. So order acquisition is going to be pretty strong in the current year. But the fourth quarter being the election quarter, how it will pan out, we have to see.
Okay, so right. Shobhit, do you think the upcoming elections could potentially slow down government sector decision making, impact flows in the order inflow perhaps, or not quite?
As I mentioned, only in the last quarter, and I think post the elections, barring something really untoward happening, I think infrastructure growth will continue. I think the government's momentum that has been built up by this government, it's pretty much irreversible.
Okay, fair. No, my only follow-up is, Shobhit, what about sorry. What about
that question?
Defending profitability?
Right. Mr. Murthy, just wanted to understand your sense as well, in fact, you know, going forward when it comes to funding in the sector, especially at the level of contractors, was low impact the execution. Do you see an improvement over there? And also margins in the aggregate for most companies have improved over the past 3 quarters. Do you think margins will improve as commodity prices have also started to come down?
Yeah, there is good improvement in the margins, not only at the EBITDA level, but also at net profit level for most of the construction companies. The GST also helped us in improving the margins by about 0.5 to 0.6%. And also, the order accretion is likely to be very strong. And you are mentioning about the support from the banks. I already mentioned what we need is a lot of non-fund based limits like bank guarantees and LCs, where support from the banking system should come in good measure particularly for at least good construction companies which are having good execution capabilities and have a good track record. That is a necessary thing at this point in time. Other than that, we are comfortably placed in terms of order book, in terms of execution, in terms of EBITDA margins, in terms of net profit margins, and the future is looking very good for us.
Okay. Chairman, thanks very much for taking out the time to speak with us this morning. We really appreciate your views, talking about the infrastructure space, talking about the infrastructure deficit and the funding gap there, and how you believe that things are turning quite quickly, and that the order inflow momentum is being sustained. That's very encouraging to see that on the ground activity is actually quite stable.